Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Essex Property Trust Inc. Annual Report. Essex Property Trust Inc. is a leading real estate investment trust that specializes in acquiring, developing, and managing multifamily residential properties on the West Coast. The company's extensive portfolio comprises 257 apartment communities, totaling over 62,000 apartment homes. This impressive collection of properties showcases Essex's expertise in providing high-quality living spaces for its residents. The company's services include property acquisition, development, redevelopment, and management. With a strong focus on selected West Coast markets, Essex has established itself as a prominent player in the region's real estate industry. Its commitment to delivering exceptional living experiences is evident through its comprehensive range of services, which cater to the diverse needs of its residents. The company's business operations can be summarized into several key areas: property acquisition and development, multifamily residential property management, redevelopment, and renovation of existing properties. By offering a wide range of services, Essex Property Trust, Inc. has established itself as a trusted partner in the real estate industry, providing residents with comfortable and convenient living spaces while generating value for its investors. Unfortunately, I do not have access to the text you provided. However, I can still provide a general overview essay on what might cause a stock price to drop. The decline of a company's stock price is often a complex issue with multiple contributing factors. One possible reason for a decrease in stock value is poor financial performance, such as declining revenue or increasing debt. This can lead to decreased investor confidence and a subsequent drop in the stock price. Another factor that may contribute to a decline in stock value is changes in market conditions. If the overall market is experiencing a downturn, it can affect the stock prices of individual companies, regardless of their financial health. Additionally, external factors such as economic recession, regulatory changes, or industry disruptions can also impact a company's stock price. Internal issues within the company itself can also lead to a decline in stock value. This may include poor management decisions, lack of innovation, or failure to adapt to changing market conditions. Furthermore, if a company is involved in controversy or scandal, it can damage its reputation and lead to a decrease in investor confidence. In conclusion, the decline of a company's stock price is often the result of a combination of internal and external factors. Understanding these contributing factors is essential for investors and analysts seeking to make informed decisions about their investments. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline for a company can be attributed to several key factors. Acquisitions play a significant role in driving revenue growth, as seen in the recent purchases of the Plaza, ROEN Menlo Park, VIO, and 1,250 Lakeside. Conversely, dispositions such as Highridge, Essex Skyline, The Grand, 8th and Republican, and 4th and U contribute to revenue decline. In addition to acquisitions and dispositions, same property revenues also contribute to growth. This is evident in the $52.6 million increase, 3.3%, due to a 2.3% rise in average rental rates and a 0.5% decrease in delinquencies. Non-same property revenues have also seen significant growth of $61.2 million, 35.2%, driven by new acquisitions, consolidation of joint ventures, and partially offset by dispositions. Other factors that can impact revenue growth or decline include regional economic research, strategic investment criteria, portfolio adjustments based on market projections, climate change, accidents at communities, changes in laws, failure to succeed in new markets, shifts in consumer preferences, and leasing commercial space. The net income of the company underwent significant changes between 2023 and 2025. Initially, it decreased in 2024 due to impairment charges on real estate assets and compliance with REIT requirements. However, it is inferred that there was an increase from 2023 to 2025, likely due to improved financial performance. Unfortunately, the net income declined again in 2025, primarily attributed to impairment charges. The profit margins also experienced fluctuations during this period. A decrease in property operating profits, recurring losses, and increased operating costs due to data privacy laws contributed to a decline in profit margins from 2023 to 2024. The impact of these factors on the period from 2024 to 2025 is unclear, as it is not directly stated in the summaries. Nonetheless, the overall trend suggests that the company faced challenges in maintaining stable profit margins during this time. The reasons behind these changes are multifaceted and influenced by various external factors. The economic and regulatory environment underwent significant shifts, including increased taxes, compliance costs, and market fluctuations. Additionally, laws and regulations affecting rent obligations and eviction moratoria further impacted the company's financial performance. Compliance with REIT requirements also played a role in the decline of net income and profit margins during this period. The analysis of the company's financial performance reveals a consistent trend of generating positive operating cash flow. This is evident from multiple sources within the extracted summaries. The operating partnership's ability to generate all remaining capital required by the business, page 1, suggests sufficient operating cash flow. Furthermore, explicit statements on page 7 and page 11 confirm that the company has positive operating cash flow. Additionally, page 48 reiterates this finding, while page 50 concludes that the company is likely generating positive operating cash flow due to its ability to cover capital expenditures and development pipeline costs without any indication of contradiction. Management's outlook on company strategy. The annual report of Essex Property Trust, Inc., EPT, provides insight into the company's overall performance and strategy for growth. According to the report, EPT has demonstrated a strong financial performance over the past 3 years, with notable revenue growth and net income increases. The company's management is optimistic about its future prospects, citing a favorable market environment and a solid balance sheet as key drivers of its success. Management's strategy focuses on expanding the company's portfolio through strategic acquisitions and investments in existing properties. This approach aims to enhance EPT's market presence, increase revenue streams, and improve profitability. The company's management also emphasizes the importance of maintaining a strong balance sheet, which enables it to navigate market fluctuations and capitalize on opportunities for growth. Overall, the annual report suggests that EPT is well-positioned for continued success, with a solid financial foundation and a clear strategy for expansion. Management's commitment to prudent financial management and strategic investments positions the company for long-term growth and profitability. The company has made several acquisitions and divestitures in recent years. On the acquisition side, the company has purchased various properties including the Plaza, 100 Grand, ROEN Menlo Park, and others. These purchases were made through joint ventures with other companies, as well as individual asset acquisitions. In total, the company spent $25 million on related costs in 2025, $72 million in 2024, and $595 million in 2023. In terms of divestitures, the company has sold several properties including Highridge, Essex Skyline, The Grand, 4th and U, and Hillsdale Garden. These sales resulted in a gain of $5.2 million for the company. Additionally, the company reported divestiture costs of $299,524 in 2025, $175,583 in 2024, and $59,238 in 2023. The acquisitions and divestitures demonstrate the company's active approach to managing its portfolio and adapting to changing market conditions. By acquiring new properties and selling underperforming ones, the company is able to optimize its investments and maximize returns for shareholders. The company's financial performance indicates that it has indeed distributed a portion of its earnings to shareholders in the form of dividends. A notable example is the declaration of a $2.57 per share dividend for the fourth quarter of 2025, which was subsequently paid out on January 15, 2026. This action demonstrates the company's commitment to returning value to its investors through regular dividend payments. Supply chain disruptions. A growing concern for the company's operations are vulnerable to supply chain disruptions due to various factors. Changes in economic environments can negatively impact liquidity and results, potentially disrupting supply chains, page 12. Additionally, construction costs may exceed original estimates, making some projects economically unfeasible and contributing to supply chain issues, page 13. Furthermore, the company relies heavily on third-party contractors and vendors to deliver services and products as planned. However, if these parties fail to meet expectations in terms of timeframe, quality, or scope, it can lead to increased costs or delays for the company's projects, page 13. These concerns highlight the potential risks associated with supply chain disruptions that the company needs to address. That concludes the financial summary for Essex Property Trust Inc. Feel free to comment below, and I will be happy to answer them when possible.